Are your emotions ruining your investment decision in the stock market? Fear and greed can make you rich or leave you broke. If you want to learn how to control your emotions and make smarter investment decision, make sure to watch this video till the end, because today I'm going to share you the secrets that top investors use to master their emotions and achieve success. So I'm going to share you the mastermind and trading view website. Emotional intelligence in investing. Are you overreacting? Now going to first point, and the first point is, what is emotional intelligence? What is EI? Emotional intelligence is the ability. Emotional intelligence is the ability to recognize, understand, and manage your emotions. Actually, what we do, we practice on chart. We always practice on chart, as well as we do fundamental analysis. When we make loss, when our portfolio not going in profit, we start educating ourselves in terms of stock market. Our portfolio is not showing profit. The reason is not that we don't have the knowledge of stock market. The reason is emotion. So we never give even 10 minutes, even 5 minutes to emotional intelligence. This is crucial, and I was also making the same mistakes earlier. Whenever market fall, whenever market fall, I used to do panic selling. Just imagine creating a portfolio. You need at least 6 to 7 months to create a portfolio. And due to any reason, anything happens in any part of the world, and that problem is not directly or indirectly related to this company or our country, but due to fear, we sell all the stocks from our portfolio. And this is the biggest challenge for all of us. So we need to work on our emotional intelligence. We need to recognize it. We need to understand it and manage our emotion. And there are four components. One is self-awareness. Second is self-regulations. Third is empathy. And fourth is social skills. So we need to understand and work on these four components. Second point is how emotion influence investing. Fear and greed. Fear and greed are the two most common emotion in the stock market. Usually we sell due to fear and we buy due to greed. Our buying and selling decision should not be based on the fear and greed. It should be based on the system. If our strategy is saying to buy the share, then we should say buy. We usually follow, and one word is FOMO, fear of missing opportunity. These are things usually we are guided by these things. So we need to understand fear leads to panic selling while greed leads to impulsive buying. And third is overreacting to market events can result in poor decision. We need to avoid current event. Something happens like some election result or some small events happens in our country or anywhere. and we make the decision according to that event. So we should not, we should think for the long term. So like just imagine any election result. Okay, just imagine after 2 years, who cares about that election decision? So the emotion, the influence of that election decision will be for one week maximum, after 1 week. So don't make the mistake. Go to third point, recognizing emotional biases. Okay, four types of biases we have. First is overconfidence biases, believing you are always right. This is the biggest bias. Biggest bias. You or we cannot be always right. We cannot be always right. If we are buying shares of 10 companies, okay, 10 different companies, if we are buying today, we may be wrong 4 out of 10 or 5 out of 10 or 6 out of 10. Even we wrong 6 out of 10, still we can make profit. Still we can make profit. Second one is loss aversion. Fear of losing money cause hesitation. We are not ready to make the loss. This is the biggest challenge. Just imagine you are wrong in 4 companies or 6 companies, maximum 6 companies. You are wrong in 6 companies out of 10. So what? If your strategy is 10%, when any share will go 10% down, your strategy say that sell it. Just sell it. It means you are booking 60% loss. 10% in each company. It means 6 companies if you are wrong, it means 60% you are making loss. But imagine remaining 4 companies. If remaining 4 companies are giving you 50% profit in each company, it means you are making 200% profit in 4 companies and you are making 60% loss in 6 companies. When you subtract 60% from 200%, still you are making 140% profit. And this is the way it is working. It will work with you as well. But you need to focus on your strategy, on your system, and ready to book the loss. Even a person who has been working for more than 10 years or 20 years, they also book the loss. No one can say that I will not book the loss in stock market. If you are saying you are not ready to book the loss, it means stock market is not for you, because stock market is not like a fixed deposit. It will not give you always profit. Sometimes you need to book the loss. Herd mentality, following the crowd blindly. This is the third bias we need to understand. So we should not follow the crowd. But what we usually do whenever we hear some tips, either from YouTube channel or from G Business News or anyway, or our friends, and we jump on that share. This is not the proper way. We should not follow the crowd. And recency bias, overvaluating recent event over long-term trend. We always think for the long term. Recent event we usually forget within 1 week, within 10 days. So we should skip following recent events. How to manage your emotions. These are the problems. Now, this point will give you the solution. How to manage your emotion. First point, pause and reflect. Avoid impulsive decision. Whenever you see market fall, okay, just take a pause and think about it. What before selling, before panic selling, just think it. What happened in these companies? If something is wrong in this company, no. Then why this company, the share price of these companies are falling? Or due to market fall, then after some time it will be okay. Why we are selling at present? There is no reason. If something is happening with your company, then you can sell. But if due to market fall, due to some fear, and you are also doing the same mistake, no, this is not the way. Have a plan, set investment goal and stick to them. At first, before investment in the stock market, make your plan. What is your plan? Why are you investing in the stock market? What do you want? What kind of profit do you want? And before investment, write it down. How much loss you are going to make and how much profit you want and what is your goal, what kind of like if you are investing 20 lakhs rupees today, okay, then what is your purpose and what is your goal? So it should be clear. Diversify, reduce risk by spreading investment. This is crucial. Diversification. You are investing in the stock market, and if you are putting your whole capital, entire capital in the stock market, definitely you will be in a very difficult situation when market fall. So diversification is important and you need to follow it. You should not put your whole capital in stock market. Some capital you should put in the bond, in the SGV, in the physical gold, in the real estate. These are important. Educate yourself, understand market dynamics, practice patience. Without patience, because with the buying and selling, you can't become wealthy person. Only 1 month, that is holding. If you are ready to hold the share, hold the company, then definitely you can become wealthy person. Fifth point, eight tail of two investors. Investor A sold Investor A sold shares during a market dip and missed recovery. And investor B held into shares, stayed calm and gained profit later. Lesson: emotional intelligence can save you from unnecessary losses. Just showing you one example from TradingView website. This is the Majgaon Dog Shibull. Just see here in the August 2022, it started moving upside, and from here to here, it had given 220% profit within three, 4 months. Okay, within 6 months. And from here, you can see from December 2022, it has fallen down. It had fallen down 30%. Okay, 30% fall. And if you are not stick with the system and if you made the mistake and you exit from this share, then understand the problem. From here, it it had given again 242% return. So you missed this opportunity due to fear, due to sell, due to panic sell. If your system is not saying you to sell, then you should not sell. And if you hold this time, it means you are able to make the profit 650%. Again here same thing happened. From here you can see there is 23% fall. But after April 2024 it had given 200% return again. So you need to stick with the system. Sixth point is practical tips for investors. First is journaling. Track emotional triggers and investment decision. What I was also making number of mistakes earlier. Okay, and biggest mistake was I was buying number of penny shares, and I was also making profit. Ultimately, I made big loss in penny share. Whenever I made loss, I was writing down on the paper, on the notes. I have one copy filled with all losses and all mistakes. And I made one summary, one page summary from that notes. Okay. And I have written everything what I should follow and what I should not repeat. And one thing is written that I am not going to buy penny share again in future. Second, I am not going to sell due to fear. So these are things are written in the summary page. So you need to make your journal. Mindfulness practice, stay grounded during market fluctuation. And third is learn from mistakes, reflect on past emotion decision. Seventh point, invest smart with emotional intelligence. Emotional intelligence is just as important as market knowledge. So stay calm, stick to your strategy and avoid overreacting. Make decision based on data, not emotion. Ready to invest smarter? Like, share and subscribe for more investing tips. Comment below what is your biggest emotional challenge in investing. Thank you so much for watching my video.